The Office for the Superintendent of Financial Institutions made headlines the other day when it announced that it's looking into changing the rules for qualifying for a mortgage. The OSFI, for short, announced that as of June 1st, it was thinking of changing the qualifying rate for uninsured mortgages to 5.25%, up from 4.79 as it stands now. Ever since then, I've received a lot of calls from people looking to get pre-approved right away, as they're worried that they're not going to be able to qualify for a mortgage when the new rules come into place. So, it's not as bad as people think, and I think it's very important to quickly go over what this rule change is, and more importantly, what it isn't. So, the rules from OSFI, the rules that they're looking at changing is for uninsured mortgages. So an uninsured mortgage is either A, if you're refinancing, if you're looking to take money out of your home, or B, if you're using an amortization of over 25 years. So that would be your 30-year mortgages are uninsurable. In order to get an uninsurable loan, you need to have 20% down. If you're one of most first-time home buyers and are putting 5% down, 10% down, then this rule change will not apply to you. If you're putting 20% down and you're using a 25-year amortization, again, this rule will not apply to you. What this rule does when it changes from 4.79 qualifying rate to 5.25% qualifying rate is if you have to go to 30 years amortization in order to qualify, then it's a little bit harder to qualify for that mortgage. In London, using the average income of $111,250, that's the average household income, it actually only changes your purchase price ability by $30,000. So whereas under the current rules, you would be able to purchase a house with 20% down and a 30-year amortization at $700,000, with the rule change, that moves down to $670,000. Now, it's definitely important to get your pre-approvals in place, and especially your rate holds in place as rates continue to go up. But London's real estate market probably won't be affected that much. Most of the calls I'm seeing, and in many of the headlines in articles that I'm reading online, there seems to be a big confusion between what OSFI is proposing and a change in the Bank of Canada stress test rate, which right now is still 4.79. But that's not what they're talking about here. They're talking about uninsured mortgages. That's the key word, is uninsured. So like I said, get your pre-approvals in place and get your rate holds in place. One of the unintended or maybe intended consequences of these headlines is that a lot of people are thinking they need to run out and buy now before the new rules get into place on June 1st. If they go into place. Right now they're just studying it. But the majority of buyers in London are either from Toronto, so they're cash price buyers, or they're under 20% down. So that's not going to affect their affordability whatsoever. With that said, the federal budget is coming out in less than 2 weeks on April 19th, and we could expect to see some actual changes to the stress test that would affect borrowers with less than 20% down. But for right now, these new rule changes won't affect a large portion of the population's affordability. If you like this video, please do click like and subscribe, and feel free to comment below.